So, as a response to Sam on Discord, who posted this particular website, which is a site that just has a whole bunch of analytics based around the S&P 500 index, I've got a few issues with this. The main one being is that it's all spaghetti. It is just generated by AI and it's trying to be everything to everybody. If we sort of, you know, just kept the pivots, for example, you got your pivot support points and resistance points. It's just much easier to do it by drawing on a chart. If we took pivots off and went, give me the fibs, again, it's easy to do it on a chart. If we went to highs and lows, who really cares about the 1 week, the 13 week, and the 52-week high? RSI, sure, again, pretty simple and easy to do on a basic chart. Standard deviation I quite like because it gives you the standard deviations of support, but again, I'd rather use the option charts for it. So I think what this is something that looks pretty, but all in all, I'm not quite sure what you would use it for unless you're looking for a particular thing. But then again, we can jump into TOS or into your favorite charting package and get all the information anyway, and in a visual format, and just better than whatever all that nonsense is. So let's go into the S&P chart on TOS and have a look. So let's have a look at TOS and let's have a look at the SPX. Now, I want to give you a very basic rundown of technical analysis. Let's stick with charting because everyone understands charting. First things first, let's bring up a 4-hour chart, which is what I have here, a 4-hour chart of the SPX. The reason I'm using a 4-hour chart is because I don't really need a year's worth of data. We're quite short-term traders. We're going to trade for a week, maybe 2 weeks, very rarely, well, maybe a touch longer if you feel the need, but most of our trades are sort of in that 1 to 2 week range. So let's go through technical analysis and let's start with the most basic, which is support and resistance. And what we're looking for is looking at this chart and trying to find support and resistance at a place it's been before. Now, what is support and resistance? Support and resistance is previous times where buyers came into the market and previous times when sellers came into the market. The most important thing I can give you about this is it's an area, not a number. Say that again. It's an area, not a number. You do not have to be exact. Second part about support and resistance, it isn't a trend line. We're not drawing something from this point up to this point up to this point. We're looking at areas where buyers came in and areas where sellers came in. The first one that stands out is somewhere down here. I've got sellers coming in here, I've got buyers coming in here, and I've got buyers coming in here. There's your first support line. The second one is about here. This is where sellers came in here, sellers came in here, and we finally broke through it. Also the previous all-time high. So let's just put a line there. And the last one is the all-time highs at the moment. You could probably put an argument in for somewhere around here. At 5,400, nice round number. There's your support and resistance. Just by looking at a chart, going back to April, mid-April. And we have resistance, resistance, support, support. Can you see the support? Support, 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 resistance, resistance, resistance. That's what we're trying to look for in a basic chart. So now you've got your support and resistance lines. We can zoom in. And what you want to do is ask yourself these 3 questions. What's the market trying to do? Is it getting it done? And then what can we do to take advantage? Now, if we look at the last couple of weeks up here, in fact, let's go to a 1-hour chart just to show it a little better. What it's done here for the last week and a bit is try to make new highs. There's the answer to the first question. Trying to break through new highs. The second question, how's it doing? Well, it got there, bounced off it again, it's up there again, trying it again. Bit of a range bound. It's consolidating. It's not really doing much. It's just trying. So if we're going to basic technical analysis, if it fails here, it should come down to 56.48. And if it fails 56.48, it should go down to 5400. That's basic technical analysis. But I'm looking at this chart right now and thinking, okay, so we're sitting at 57.64 or thereabouts. Let's have a look at the option market and let's see what the standard deviations, or what is more commonly called the expected move. So over the next week, we would expect the expected move to be, waiting. I'm in the bush at the moment. The internet is not the fastest thing in the world. So let's say till Friday, the 4th of October. The expected move is 80 points. In fact, we don't even need the option charts. Look on the right-hand side here. 1st of October today, we've got 30 points, 43 tomorrow, 56, 79. So it's 80 points up and 80 points down. That's what the option market is pricing in the move. 80 points up, 80 points down. Let's go back to our chart. We're at 57.60 at the moment. Let's take 80 points from that, and that'll take us down to 56.85, which is about there. And then the other move we've got is 80 points higher, which is about 58.20. So the option market has us somewhere between these two. You can also, if you're more advanced with TOS, you can do the cones of probability. Look up those for a bit more information. But now we have an idea that the market's going to be somewhere between here and here 70% of the time. That to me says that we can probably sell an iron condor around this. We can sell put spreads around the 56.15 mark. You've got heaps of options, but now you have an understanding, and your market awareness is looking at the charts and going, cool, I know where support is, I know where resistance is, I know what the option market thinks the standard deviation or the expected move is. Now I have enough information in my melon that I can sort of work out a trade. You'll notice I haven't looked at MACD, I haven't looked at RSI, I haven't looked at any of the other nonsense, because we are such a short-term trader. We are not looking at what's going to happen in the next 10 minutes, or the next hour, or the next 3 hours. We're looking at the overall gist of the market for the next week, week and a half. And we're working out plans that, if it does break 56.48, what are we going to do? If it does make new highs above 5800, what are we going to do? The point of technical analysis is not to, predict the market. It's just to have it in the back of your head and go, okay, I reckon it's going to be about here. I can make a trade that sort of allows that to happen, and then put the trade on. And if it goes pear-shaped, it goes pear-shaped. If it goes well, it goes well. You collect your money and carry on. But the big thing that I think most traders have to understand is that, you know what? It's okay to be wrong. It really is. When you get good at trading, you'll work out how to make money when you're wrong. And that really is the holy grail of trading. Not all the indicators, not all the RSAs, not all the pivot points. The holy grail of trading is being able to make money when you're wrong. So I hope that little video gives you guys a bit of insight into the simplicity of technical analysis and not having to guess and pick and do some kind of Swami T reading. Look at the charts and just ask yourself the 3 questions. What's the market doing? How good is it going? And how can I make money out of it? Have a great evening.